Hey everyone, Coach Investor back to another video for you today. So let's have a quick look at what Snap reported. Of course, if you're seeing the action after hours or pre-market, you know that this was again not such a great report by the company. Continues the trend of underperforming. The stock is down around 15% at the time of making this video. Now, what exactly happened? So they actually beat a little bit on earnings per share. They beat expectations on an EBITDA basis. They slightly missed on revenue. So why is the stock down 15%? Well, in short, it's because, outlook isn't looking great. For Q1, they expect revenue to decline between 2 and 10% year over year, and quarter to date, they already seen that decline around 7% or so year over year. So there's no slowing down in this, rolling snowball that becomes bigger and bigger and, continues to roll down at a fast pace. Now with Snap, I've been pretty clear on my thoughts with regards to the company. I think there are way better options if you want an advertising stock in your portfolio. Because, in the last couple of years, 97 to 99% of their revenue comes from advertising. So why not go with stronger companies like, The Trade Desk, Pinterest, or Meta, for example? Would make more sense. Now, we're going to have a look at all the reports. I'm going to be as unbiased as possible. I'm going to show you the bad and the better things as well. But overall, they don't really give us guidance because of, the current macroeconomic environment. They just gave us the internal guidance, which obviously the market took as a big negative. Now, with regards to Snap, if you remember, not so long ago, over a year or so, they expected to grow 50%. No problem. Well, where's that 50% now? You see, this is why a good management team is very important to an investment thesis. Execution is crucial, as we've seen and as we've covered on this channel with AMD. If you missed that video, it's going to be in the top right corner. Now, before we go and look at the report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So, let's dive right into this. Average daily active users. Again, this is a positive slide. Globally, it's up 17%. North America up 3% year over year, flat quarter over quarter. Europe and rest of the world still seeing some growth there, so that's fine. Rest of the world, it's up 31%. Of course, as we've talked in the past, rest of the world is, monetization-wise, not the best. So let's continue here. Revenue by geography. Globally, it's up 0.1%. North America, that's down 6%. Europe up 5%. Rest of the world up 28%. And a big jump quarter over quarter as well. Remember, Q4 is usually a strong quarter, as you can see here in the past. But now comes ARPU, so monetization of these users. Globally, that's down 15%. North America down 9%. Europe down 6%. Rest of the world down 2%. As you can see clearly here, rest of the world ARPU $1.10. The rest is much higher. For example, Europe, that's more than double. Now, when it comes to adjusted gross margin, we've seen some improvements here quarter over quarter from 61% to 64%, but year over year, it's down 2 percentage points. Okay, but at least we can see here some recovery. Again, this is also because Q4 is usually a stronger quarter. Now, let's have a look at the operating expense margin. You can see here clearly some improvement year over year. Quarter over quarter, that has increased from 46 to 54%. When we look at adjusted operating expense composition, so difference between each segment, let's say, so R&D is yellow, G&A, sales and marketing. You can see a little improvement there. Now, they said with regards to cost cuts, the restructuring, etc., it will take some time until it will hit the bottom line. All right, let's see what happens. But in the meantime, we can look at net income, in this case, a loss, and adjusted EBITDA. Of course, you can already see some improvements here, quarter over quarter. Of course, this is still negative right now. Adjusted EBITDA has improved quite nicely quarter over quarter. Of course, it is still down year over year quite a lot, but it did beat expectations on an adjusted EBITDA basis, which, okay, is fine. Then when we're looking at operating cash flow and free cash flow, we can see the same thing here. Quarter over quarter, nice improvement here in operating cash flow. Year over year, still down. Now with regards to free cash flow, same picture here, quarter over quarter, nice improvement. But then again, year over year, since you can see Q4 is usually the strong quarter, year over year, it's still a huge difference there. Now, I'm not going to go over all the same numbers for the full year. I'm just going to go over the most interesting, important points for me. So adjusted gross margin for the year has improved to 62%. Adjusted gross profit has improved as well, and it's up 7 times since 2018. But if we look at net loss and adjusted EBITDA, we can see, well, 2022 has been the worst year since 2018. Adjusted EBITDA worse than 2021, but better than the rest, but still not great at all. And that's after the fact that at first, when they didn't see the effect of the Apple changes, when they thought they could still grow 50% year over year, they said, well, our business is robust, we can still grow extremely fast, we don't see any issues in the market. To me, this is an issue of management. If management were seeing the issue a bit before and weren't so, let's say, ridiculously optimistic when you see other giants out there, Meta, for example, taking a big hit, and you think that Snap, which to me is just a feature, is going to continue to grow 50%, well, this is the result. And of course, when we look at operating cash flow and free cash flow, it's the same picture here. Yes, this year, still positive operating cash flow and free cash flow, so congratulations, but compared to 2021 is, well, barely something. And then compared to the other years, of course, the other years were negative. So a big improvement there. Let's see what happens in 2023, if it will still be positive or if we're continuing to decline here. Now, of course, since this is a very important metric, stock-based compensation expense, well, last year, 2021, it was just under 300 million. Right now, at the end of 2022, that was close to 450 million. So to conclude, and I think that by now you know my conclusion when it comes to Snap, but I first want to plug in a quote by Joseph Carlson, who took a quote from Michael Burry when talking about, well, some companies purely exist just to serve themselves. What does that mean? That when you see free cash flow, which is positive, usually that's great because, well, it goes back to the shareholders eventually. But sometimes you can have free cash flow positive, but where does that go? Straight back to the employees to pay stock-based compensation. And I think that's exactly what's happening here with Snap as well, with other companies as well. For example, Spotify might be one example. Palantir has been an example as well. But overall, my conclusion with Snap, to me, it's not an investable company, especially not since, well, the majority of its revenue comes from advertising. There are way better advertising companies out there, advertising stocks that you can own. Google, Meta, Pinterest, The Trade Desk, even Roku, for that matter, is a better play than Snap. To me, Snap will and will always stay a feature, something that any company out there can copy. You're going to say, oh, so why aren't they doing this? Well, Instagram is, in my eyes, 10 times better than Snap. Has all the features, right? When Snap came out with stories, what happens? Well, they basically copied it. Biggest mistake the CEO made is not to sell to Meta. But hey, let's see what happens, what the future holds. Of course, do share your thoughts down in the comments below with regards to Snap. I'm fairly certain that none of my viewers actually own this company. But hey, let's wait and see. Tonight we have Meta's earnings, then tomorrow big ones, Amazon for example. So we're going to cover all of that on this channel. So if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.